Welcome to Weekly Market Update, where we talk about everything mortgage and real estate related. We have some great information to talk about as always, so let's jump right in it. The Case-Shiller Home Price Index, which is the gold standard for appreciation, showed that home prices rose 0.9% in August. Home prices have been on the rise since January and are now up 2.6% from last year and 1.5% above the June peak in home prices. Case-Shiller is continuing to set new all-time highs in home prices as of July. This index is on pace for 6% appreciation this year, but is likely to think that we may see the pace slow through the end of the year, which is typically a slower time for appreciation. Now, the FHFA released their home price index, which measures home price appreciation on single-family homes with conforming loan amounts. Different than Case-Shiller, it does not include cash buyers or jumbo loans. The FHFA reported that prices rose 0.6% in August and are up 5.6% year over year. They are now almost 4.7% above last year's peak and continue to set record highs in home prices every month since February of this year. Looking at the top 5 appreciation report in the U.S., since January, appreciation has been on the rise. And according to Case-Shiller, FHFA, CoreLogic, Black Knight, and Zillow, home values are setting new all-time highs, surpassing the peaks from last year and more than recovering from the downturn we saw in the second half of 2022. Remember, home prices rose 9% in the first half of 2022, fell 3% in the second half, and completed the year at 6% appreciation. In 2023, they are on pace to appreciate 6 to 8% based on the pace through August, depending on the appreciation report. Again, we may see these paces slow through the end of the year, but we are still on track for solid full-year appreciation. CoreLogic reported that loan performances remained strong in August and overall delinquencies remained near record lows. Those 30 days or more delinquent fell back from 2.7% to 2.6%, while 90-day plus delinquents fell from 1% to 3.9%, the lowest level in almost 25 years. Those in foreclosures just stayed off the lowest levels on record of 0.3%. Even though some delinquencies like credit cards are on the rise, people are clearly still paying their mortgage. With inventory low and strong loan performance, we don't see any signs of housing crash in the near future. Bottom line is we need more sellers and buyers. Now, as for mortgage and inflation, the first reading of Q3 GDP came out last week and showed that the U.S. grew at 4.9% annualized pace, which was hotter than the estimate of 4.3%. The stronger Q3 GDP was almost solely due to the increase in consumer spending, the lift in inventory, and also government spending. Some experts think that this is unsustainable, and with such a high Q3 comparison, thinks that we could see things slow in Q4 and even see a negative number, which will be good for rates in the near future. The October ADP employment report showed that there were 113 jobs created during the month, which was weaker than the 150,000 jobs expected. This following an unrevised 89,000 in September. Clearly, the market is cooling according to ADP, but it is thus far in not comparing to the BLS report. The market is expected 108,000 jobs created in the BLS report on Friday. If we get a similar report to the ADP report today, it will be good for interest rates. The MBA released their mortgage application data for last week, showing that purchases applications fell 2% and are now down 20% year over year. Refinances fell 4% and are down 12% year over year. And what's crazy is refinance made up almost a third of all transactions. These are all cash out refinance and debt consolidations. Homeowners are saving a ton of money monthly by paying off their high interest credit card debt. Interest rates remained around 7 7/8 and about 3/4% higher than they were this time last year when rates were about 3 1/8. The Federal Reserve holds interest rates steady today as expected and stated they are undecided on any rate hikes in the near future. Today was a great day for mortgage rates. It would be amazing to see this trend continue. I know it's a lot of information, so call me if you have any questions. Thanks. Bye.